Hi, this is Stacey Warden, CEO of the Al Graham Foundation. You're watching Taking Stocks.
2 minutes to go here until the close, and the tail of the tape is a market in search of an identity, at least for the S&P 500. More than a dozen flips between positive territory to negative territory, and all things considered, after a full day of trading here on Wall Street, the S&P 500 may finish just flat to the upside, but the other major market indexes, they've been off and roaring from the 10 o'clock hour. Investors rotating out of technology stocks today here on this Thursday, January 8th. Energy, staples, and materials, those are your strongest performing sectors in the S&P 500 today, with losses to the downside led by tech and healthcare. Welcome to the broadcast, one and all. You're watching Taking Stock. I'm your host here at the New York Stock Exchange, J.D. Durkin, just moments away from the ringing of the iconic closing bell. We do it every day here at the NYSE. Might as well keep the party rolling. The Magnificent Seven tech stocks are in mixed territory on this session. A strong outperformance from Amazon once again, which is quietly the best performing Mag 7 name in 2026. After last year, it was the worst performing name. Nvidia is the worst performing Mag 7. Volatility lifting here on the day, with the VIX reaching its highest level in the last 3 weeks. Gold and silver taking a breather, and the oil benchmarks, WTI and Brent crude, both up over 3%. We got the team from Babcock and Wilcox, ticker symbol BW, here at the big board, set to do the honors for the closing bell. They will also be on the show in just a bit, but time now for the closing bell at the NYSE. And there you have it, folks. The team from Babcock and Wilcox, ticker symbol BW, here at the New York Stock Exchange, bringing about a close to trading here at the financial markets. Also catching a bid, oil and energy stocks led by ConocoPhillips, the home builders led by Lennar and Pulte Group, and the retailers led by Macy's. Let's bring in our first guest. This is William Ryan, founder and CEO of Granite Shares, to get his perspective on today's price action and other things on his radar, as we're now about a full week or so into the new year. Thanks for being here.
You're welcome. Good to be here.
Talk to me about, first and foremost, what you're seeing with these markets. Are you surprised at the show of force for equities so far, going back to last Friday's session, how we've started, the strength for 2026?
I think it's in line with expectations. We ended up the end of 2025 quite strongly. We had those blockbuster GDP number just before the end of the year that I think is now continuing people's expectations. Good numbers about the deficit today. Inflation's in check, interest rates coming down, and companies still posting good numbers.
What does all of this mean for the Fed? January 28th, we will get the first FOMC decision of 2026, one of the last ones for Jerome Powell as chair. And we got a few new voting members as well. Neil Kashkari, a handful of others have not been voting members, maybe a bit more dovish, depending on where you fall. What do you think the Fed takes into consideration for January?
I think there was some perhaps concern that the job numbers came in lighter than expectations towards the end of last year, and that maybe gave the Fed room to lower interest rates. But I think that GDP number perhaps has put that to the side, at least for now. The economy's in good shape. If they want to cut rates, I think they can, but I think they'll remain data dependent and probably keep it on hold for this particular call.
We saw gold and silver take a bit of a breather today, but really the storyline throughout the end part of 2025, roaring to new all-time highs. What's on your radar for the precious and some of the industrial metals, knowing a name like silver has a lot of different purposes?
So commodities came into this year, I think, with a big tailwind behind them. We need more power across the economy for AI, for data centers, for all of the build out that we expect. We need more commodities for the electrification of the economy. So all of that was in place. And then of course we had the news about Venezuela and the geopolitical situation there, which I think has really focused everybody's minds, not just on the price of oil and the oil situation, but on metals and minerals again. And so put a bid on gold, put a bid on the precious metals complex that continues from last year, and I think sets the stage well for the remainder of this year.
Retail investors are very familiar with the name Granite Shares, a powerhouse of ETF issuers. What type of interest are you seeing from retail investors? What are they more naturally gravitating towards in the Granite Shares ETF space?
I think the same story, the bull market rolls on, so a lot of interest in leveraged ETFs on single stocks, particularly your tech stocks, your Nvidias, your Teslas, etc. A lot of interest in yield with concerns about interest rates coming down and your cash in your bank account being worth less today than it was 6 months ago, 12 months ago. The search for yield is very much on. Options-based income ETFs like our Yield Boost range have been really popular with investors. And then the last thing, as we briefly touched on, it's precious metals. It's gold, it's platinum, it's other metals that people are looking for to join this rally as we look forward to 2026.
I would assume the big tech, the AI, the semiconductor play still of high interest for retail investors. Is that a fair read?
100%.
Yeah.
AI is still the most important trade out there for this year and perhaps the next few years. But I think we've got some other things to talk about now in the mix, namely the commodity market, which we haven't talked about for some time.
Yeah, of course. We'll have to have you back. We'll talk much more about the commodity market the next time you join us here on the show. That's William Ryan, founder and CEO of the great one and only Granite Shares. We're such a fan of the product. Thank you for being here. Really good to have you.
Thank you. Appreciate it.
Josh will grab your mic. Howie, you and I are going to head this way through the crowd. Pardon me, folks, one and all, for the Taking Stock broadcast. All right, more than $2 million in total trade volume up on Polymarket as participants are trying to figure out, will the Supreme Court rule in favor of the president's tariffs? We are expecting that Supreme Court decision to cross the wires tomorrow. Only 25% chance that they actually vote in favor of the president's tariffs. Remember, back in August, we had the U.S. Court of Appeals ruling that the president overstepped his authority. Morgan Stanley says when we get this decision from the High Court, there's some room for nuance. There's gray area here. There might be winners and losers on both sides of this equation, and we will closely watch the bond market's reaction if we do, in fact, get that decision from the Supreme Court on Friday. Howie, before we toss the break, we'll take a look at two New York Stock Exchange notables. How about Best Buy, one of the best performers in the S&P 500, shaking off price target cut from analysts at Barclays who had cut their price target from 81 down to 77. Best Buy shares down 13% last year, but having a very strong start so far here to 2026. And how about ticker symbol M, the great Macy's, one and all. We mentioned the retailers catching a bid at the top of the show. This name was identified by Zacks Equity Research as its bull of the day last week. The stock is up 7% so far year to date and up almost 50% over the last 52 weeks. Earlier today, right here on the trading floor of the New York Stock Exchange, FinTech TV's very own Remy Blair sat down with Mark Alanowitz. He is the CEO of Nant Global Finance. Take a look.
Welcome to FinTech TV. I'm Remy Blair. Nant Global Finance is making waves with the nation's first fully integrated blockchain-enabled capital markets platform. It is bringing together broker-dealer services, exchange operations, as well as transfer agency capabilities and digital asset technology. Now, Nant says the goal is to modernize how securities are issued, traded, and managed while staying fully compliant in a highly regulated industry. Joining me here at the New York Stock Exchange is Mark Alanowitz, CEO of Nant Global Finance. Mark, great to have you here. Thank you so much for joining me.
I appreciate you having me today. Thank you.
Well, you just had a big announcement here. So for our viewers, can you actually tell us about this platform?
Yeah, so today was what we consider to be a historic moment, because what we did is we brought together several companies to become one. And these are all regulated entities that have now merged into one entity called Nant Global Finance. And our goal is to modernize the capital markets. We're not trying to change it, but we're trying to make it more efficient by using technology.
So you mentioned a key word there, Mark, and that is efficiency, especially in a highly regulated industry. So what does this look like?
So our merger consists of 3 broker-dealers, 2 U.S. transfer agents, a blockchain software technology company, 64 blockchain patents, and the support of the Los Angeles Times. And what we've designed is an ecosystem that works with each other, where each one of these different businesses all work synergistically to create a complete capital markets platform that allows investors in the future, we're going through regulatory approval, but will allow these investors to be able to trade in digital securities. And what I mean by digital securities, these are not cryptocurrencies, these are not coins or meme coins or what we call mirror coins, which actually securities right here on the New York Stock Exchange and NASDAQ that can be now tokenized and allow investors to be able to trade in a more efficient manner.
Yes, so Mark, can you walk us through this and tell us how this platform actually benefits issuers as well as investors right now?
Well, the key to blockchain-based marketplaces, and everyone's been trying to do this, and there's a lot of companies that have announced that they have ATSs that allow private security transactions, but those are not what we call listed securities. These are not covered securities or national market securities, securities that trade on the New York or NASDAQ. One of the problems with the capital markets today is that there's I guess you want to say, opaque ability to see complete transparency, meaning there's many different levels. For instance, like with Robinhood, everybody thinks it's free trading. The reality is nothing's free. Somebody throughout the process is making money. When you trade securities on the blockchain, you have efficiencies that are put into place to allow transparency where every single trade is memorialized on the blockchain. So it's completely visible to everyone at all times. There's no ability to have any type of market manipulation, layering, spoofing. It's an open order book, fully displayed, where investors can truly see best bid, best offer, and be able to get great price transparency as well as price execution. But most importantly, it's a T0 instantaneous settlement. So that means these securities trade and they settle immediately, not on T1. So investors are able to then be able to buy and sell instantly and be able to have those funds available to them on both sides of the transaction.
Yeah, and Mark, building on what you just said, can you tell us how you're actually balancing innovation when it comes to blockchain as well as regulatory compliance? Because I think that's a key component there.
Well, I think what really sets NAND apart is every one of us that joined into this new organization come from a regulated background. For instance, I'm an investment banker, 35 years on the street, and I created the ability under the Jobs Act to see securities trade on the New York Stock Exchange and NASDAQ using Reg A. We've done numerous transactions. We most recently just did the Newsmax, which was the first ever onto the NYSE. We've done lots of different transactions that enable retail investors to be able to invest. We also came together with Dr. Patrick Soon-Shiong. Patrick is the founder, owner, or not the founder, excuse me, the owner of the Los Angeles Times. He's the creator of over 500 patents. 65 of those came into our organization that cover blockchain securities. We also have Brian Collins. Brian is a technologist who built high-frequency trading systems for Credit Suisse and UBS using blockchain technology. He's integrated this software into what we're doing. We have Equity Stock Transfer, which is a full-service regulated transfer agent. All of these various components come together, and then we also have another company called Trading Block, which is an online retail trading platform that allows investors to be able to buy traditional securities and options and futures. Why this is all important is it comes together to create an ecosystem, because in order to have an efficient capital markets scenario, you need to have each piece of this puzzle. We've now created those pieces. So being regulated allows us to give investors protection, transparency, and under the oversight of the SEC and FINRA. Unlike a lot of our competitors that are more, I would call them blockchain maximalists, where they're technologists. They have great ideas. They want to DeFi the world. But the reality is you're not going to change the way Wall Street works. You need to conform and work with it and make it better.
Pleasure talking to you today. Thank you so much for joining me, and congratulations on the announcement.
Thank you very much.
My pleasure.
Appreciate it. Thank you.
Welcome back to the show. Time now for the latest headlines you need to know in the world of startups. Oh, no, not startups, races around. Let's try that again. Fintech, crypto, and AI. It's almost like it's the first time hosting the show. All right, the crypto majors in mixed territory at this hour. Bitcoin selling off 0.3%, currently trading at 90,982. Ethereum down 1.7%, and Solana up 1.5%. Caterpillar, in other news, partnering with NVIDIA to embed AI directly into construction equipment, piloting an AI assistant for machines working in the field. And finally, a new report from Microsoft shows that China-based DeepSeek is driving AI adoption across developing economies, using low-cost, open models to close the usage gap with advanced nations. Our next guest joins us down here at the FinTech TV booth. This is Cameron Freiermeyer. He is the CFO of Babcock & Wilcox. Not just a special guest, but a guest who just rang the iconic closing bell. Thanks for being here.
Oh, thanks for having me.
So this was really a treat for me to find out right before we came back from break that this is your first time down here at the big board. What has the experience been like, and nonetheless, to ring the closing bell?
It's been surreal. I mean, it's really been crazy. I mean, I never expected anything like this. First time here, and just in awe. I mean, just happy to be part of it.
What should people know about the core work that you and your colleagues do at Babcock and Wilcox for anyone a bit unfamiliar? And talk to me about some of your first quarter priorities for the new year.
Okay. So yeah, we're in the power business. So, we generate steam for power. Right now, a lot of stuff that we're working on is, related to data centers. Data centers and AI, they're, crazy amount of power generation they need. And, we're uniquely situated that we can give them the power that they need. So, we're working on a few things in the first quarter. We have a few announcements out there with, for example, Applied Digital. I think we had an announcement out there today and, a few weeks back. And that's basically centering around creating 1.2 gigawatts of power. And, we're there and we can provide that. We can provide that quickly.
Talk to me a bit about the state of the balance sheet. What did that evolution look like throughout 2025? And how do you feel the company is situated as we roll forward into the new year?
Yeah, so starting out in 2025, our balance sheet wasn't the strongest. We had about, $380 million of debt that was coming due in 26. Because of the power generation needs that are happening today, really gave us a lot of tailwinds. And those tailwinds allowed us to really strengthen our balance sheet. We sold off a few assets. We were really able to clean up about $250 million of that debt, and then also push another about $100 million out to 2030. So it really made us a much stronger company. And going forward, we feel really confident that, we can meet all our customers' needs.
Cameron, talk to me about the key points of focus, the top priorities, and any outlook you have for the company or the general space you operate in for the rest of 2026.
Yeah, really, we're going to focus on making our customers' needs, especially given this higher power demand that's out there. Really need to focus on bringing that power to them as quickly as possible. That's the AI, the data center, also the global power needs and fossil fuel are being run more often. It really suits our power, our parts business, our service business, and really growing that quite a bit. So really looking forward to 2026 because a lot of these tailwinds are really setting us up for a banner year.
Oh, so talk to me about more of those tailwinds. Where do you see the biggest opportunities for growth and any top priority that maybe even you and your team did not expect to be a priority this time last year?
So I'm going to sound like a broken record because it's the AI and data centers. So
Awesome.
I go back a year ago, I probably couldn't envision all the power demand that's happening because of those and really how it's impacting us. So that's probably our number one largest possibility for growth. We did that Applied announcement a few weeks back, and then again today, basically going forward, where we got the limited notice proceed to provide 1.2 gigawatts. That alone is about $1.5 billion of revenue over 3 years for us. So when that contract fully releases, that's pretty big for us and pretty good top line growth.
Applied Materials, very popular name that a lot of people know. I got less than a minute. How does a relationship like that come together? Because we see the headlines on the outside. We have no idea what it takes to actually come to fruition.
That's been being developed for years. Our CEO has been working closely with their CEO because they started out in more crypto and then transitioned into data centers, AI, and as we've been talking to them about their need for power, really our BD, our sales teams have been working closely with theirs to say, here's the solution we can provide you. And we provided them a really unique solution that we can get them power quicker than anybody else. So really excited.
Cameron Frymyer is the CFO at Babcock and Wilcox and also the ringer of the closing bell on this great day here on Wall Street. Thank you for being here. Thanks for being on the show. Please come back and see us at the big board anytime.
Thank you.
Nice to have you. Folks, don't go anywhere. Much more Taking Stock coming up from the NYSE right after this.
Woo! Yeah!
Welcome back to the show. Now it is actually time to bring you the headlines you need to know in the worlds of startups, raises, and rounds on this Thursday. First up, Elon Musk's AI startup xAI raising $20 billion in a mega round led by huge name investors, including Cisco and NVIDIA, pushing the company's valuation north of $230 billion. Next up, AI-powered e-commerce startup Swap Commerce just closing a $100 million round only 6 months after a $40 million raise, signaling heavy investor confidence as it takes aim at Shopify. And finally, Bloomberg reporting Discord has filed confidential IPO paperwork with the SEC and is targeting a debut for the month of March. Goldman Sachs and JP Morgan lined up reportedly as underwriters. The New York Stock Exchange's very own Kristen Scholler sat down with Nikhil Budama of Ambience Health at the Health Conference in Las Vegas, Nevada, to talk all about the future of healthcare. Take a look.
We're here at the Health Innovation Conference at the Venetian in Las Vegas, talking to all sorts of leaders about the future of healthcare and health technology. And joining me now is one of those leaders, Nikhil Budama. He's the co-founder and CEO of Ambience Health. Nikhil, welcome.
Thank you for having me.
It's great to sit down with you here at this event. What do you see as the future of healthcare?
Yeah. I think you look at the life of a physician, especially one practicing in a rural setting, where you live and the places you get to go seek healthcare fundamentally change the quality of the care that you actually receive. And I think AI has this opportunity to be a great equalizer. So even if you live in a rural setting, you're driving 2 hours to go see your clinician, the opportunity over the next 10 years to get the same quality of care that you would if you were flying to a Cleveland Clinic or a Mayo Clinic, I think that's very well within the realm of possibility over the next 10 years.
How is your company leaning into AI?
Well, for us, we think about how do we use this technology to really empower the clinician at the front lines? And you think about the profession of medicine today, the reality is they really barely get to take care of this person in front of them. A big part of it is technology has sort of created this barrier between them and their patient. The amount of time that clinicians spend scavenging through the EHR to find information, how much time they spend writing documentation, navigating all the complicated coding and billing rules to get reimbursed by insurance companies. The goal for Ambience is how do we leverage this set of AI capabilities to take that burden and liberate the clinician from the keyboard so they can build authentic relationships with their patients and just focus on taking care of them.
Healthcare can be extremely complex. How is Ambience stepping up to meet that challenge?
I think it's especially complicated for us because we work with some of the most sort of sophisticated academic medical centers and integrated delivery networks in the country. And you think about these organizations, a place like Cleveland Clinic has 100, 200 different specialty service lines and subspecialty areas. Even something as simple as ear, neck, and throat, the work of a laryngologist versus a sleep surgeon versus someone you're seeing for sinus surgery, they have completely different medicine they're practicing, very different workflows in the EHR, very different coding and billing and reimbursement rules. And so a big challenge for us is how do we build a bespoke product that truly appreciates and understands the differences for each of those specialists and achieves a magical experience for the clinician?
About those specialists, I see that your platform supports more than 200 specialties. How is that possible?
There's probably a few different pieces. The first is we spend a lot of time fine-tuning these frontier reasoning models to deeply understand the medicine that's happening in every single one of these visits. What a lot of people don't fully understand about medical documentation is it's not a summary of the conversation. It's a reflection of the medical decision-making that's happening in the visit. And so you'll oftentimes hear clinicians using Ambience say, it feels like the technology is reading my mind. And that's a big part of how you create a magical experience for the clinician. The second piece is the workflows are also so different, each of these specialty areas. So you think about an oncologist, 70% of their visits are follow-up visits. And so you need a system of intelligence to understand all the past context, the past notes, the labs, the pathology reports, fax documents, and synthesizing all that information and combining it with information in the conversation to write documentation. And if you have two separate systems, one of them doing the summary of past information, one of them summarizing the conversation, you can imagine it's a broken workflow for the clinician because they're trying to merge two summaries together. And so there's all these details in workflow you have to get right, all these very specific improvements in clinical reasoning you have to get right to be able to actually serve each of these specialty service lines specifically.
Thank you so much for sitting down with me, of course, co-founder and CEO of Ambience Health.
Thank you for having me.
I am Scarlett Sieber with Money 2020, and this is how fintech companies actually make money. Today we're going to be breaking down Upstart, the AI-powered lender that says your credit score is cute, but your data, that's hotter. Upstart launched in 2012 with a bold idea. Traditional credit scores are outdated. Why judge you on a number when AI can analyze your education, job history, and even how you manage subscriptions? Now Upstart is listed right here at the NYSE, and they partner with banks and credit unions to approve loans faster and smarter. So how does Upstart actually make money? Let's break it down. First of all, referral fees. Banks pay Upstart when they originate loans through its platform. Then there's the servicing fees. Upstart earns ongoing fees for managing those loans. Then there's the interest spread. For loans they hold temporarily, they do pocket that difference. There's the AI licensing. Their underwriting tech isn't just cool, they actually monetize that as well. The white labeling is out in the market. The secret sauce for Upstart is quite simple, actually. They turn data into dollars, because in fintech, the algorithm is the new credit score. Do you have a fintech company or a company in general that you want us to break down? Leave it in the comments, and maybe it will make the cut and get on the show. Back over to you.
Welcome back to the show. Tomorrow on Wall Street, at long last, the December jobs report will cross the wire from the Bureau of Labor Statistics at 8:30 a.m. Wall Street analysts are expecting job gains of 73,000 for the month and actually expecting the unemployment rate to tick down from 4.6% down to 4.5%. We get that information, which will undoubtedly move the markets before trading opens tomorrow. 10 a.m. the University of Michigan Consumer Sentiment Survey crossing the wire as well. And we may get that highly anticipated Supreme Court tariff ruling. That's going to do it for today's edition of Taking Stock. Have a great Thursday night. We will see you again tomorrow. Woo!